how are you?
Hi, Cecelia. Great to be back with you again today.
Yes, I'm very excited on this dreary last day of January of 2023. Boy, are we moving through this year already. We have some great news about the Maryland Mortgage Program.
Yeah, I'm excited to share with you guys. The Maryland Mortgage Program has been a staple of the down payment assistance community for years. I've been doing this 20 years and I've always offered the Maryland Mortgage Program loan products and options for consumers. And quite honestly, they change a lot. They change frequently. And so it's always good to revisit these and just kind of share this information with consumers who might be interested in purchasing a home and can't do so because they're struggling with the ability to come up with a down payment. And we've got some solutions and options for those guys as well. And I'm excited to share this information with you and all of your followers.
Awesome. Well, let's get into it.
All right, I'm with you. Let's just jump right in here. So again, for those of you who don't know me, my name is Billy Saunders. I am a mortgage loan officer with Caliber Home Loans. I've been serving the real estate community throughout DC, Maryland, and Virginia for over 23 years, and super excited to be with Cecelia today and talk about what I always laugh. I said, look, it's raining money out there, folks. People are missing these opportunities to take advantage of some down payment assistance, right? And we're going to really get in today, and we're going to talk in detail about the one that is probably the most popular down payment assistance program in our community, which is the Maryland Mortgage Program. Cecelia, you know as well as I do that, the down payment is probably one of the biggest obstacles that prospective home buyers struggle with when they want to become a homeowner, right? Wouldn't you agree?
Absolutely. Yes. And I'm seeing this really show up in our business again.
Yeah, it really is. It's starting to become more relevant now than it has been in a while. And the Maryland Mortgage Program has been around, as I mentioned, for years, and it's terrific because what it does, it's a program that provides the solution for so many people who want to become homeowners and they're working really hard and they're just paycheck to paycheck and they're trying to become, they're drowning in rent and they really want to be able to have the opportunity to become a homeowner and experience, the greatest wealth building tool that America has to offer to its citizens. The Maryland Mortgage Program is also commonly referred to as MMP. You may hear that, right?
Yes.
And some people who, like myself, who've been around for a long time, we still refer to it as CDA. So, but either way, whether you call it Maryland Mortgage Program, MMP, CDA, what it is, it's a great option that we have to be able to offer to home buying consumers because it really truly does offer a vast array of down payment assistant packages. So let's dig in right away. Let's get into it.
Let's show people how they can really buy a house in today's world.
Yeah, absolutely. Now, the first thing that people need to know when they're participating in the program is that the interest rates that are associated with down payment assistance programs pretty much across the board are going to be a bit higher than a traditional mortgage interest rate. And quite honestly, that's just part of the deal. You consider it a compromise. I'm sure we've all heard the sayings like, what's the catch or what's the angle? It sounds too good to be true. It probably is. Or I like to tell everybody there's really no such thing as free money, right? So we hear that all the time. So as you can see here from looking at the screen, these are just an example of some of the interest rates that are presented as of Friday. Now, at the time that we're presenting this, it was a couple of days ago, but this is the rates that just came out last week. And they don't change very frequently. And if they do change, they move a little bit, but not too much. But as of Friday, January 27th, just for example, the first time Advantage 6,000 loan, that comes with a $6,000 down payment assistance. And if you're getting a conventional loan, that typical rate is going to be 6.875. And the government rate, which is typically FHA, VA, or USDA, these are the government-backed programs. So when you see government listed, that's what they're referencing. That's 6.75, but even better than just giving $6,000 or receiving $6,000, the Maryland Mortgage Program is offering a 3% of the borrower's loan amount. For example, if the consumer is purchasing a $400,000 loan, which that's just about the average home sales price in the state of Maryland, they can get up to $12,000 for an FHA loan at a rate of 6.75%. So that's a pretty good interest rate considering what you're receiving in down payment assistance. And one of the things that I tell everybody when you're going through this product and program is think about it from a winning position, right? Like how are you positioning yourself to win in this mortgage transaction? Maybe you have a buyer who has a couple $1,000s in the bank and they're buying their first home. We all know that they've got to furnish these homes after they buy them, right? You got to buy furniture. You got to get your new big screen TV on the wall. Maybe you want to come in and do some renovations or some repairs. And you don't want to exhaust every dollar that you've saved in the process to go towards the down payment, because then that doesn't leave you with the money that you might need to be able to furnish your home. So rather than going out and using your money for the down payment and then going out and taking a 22% interest rate credit card at your local home improvement store, this is a better way for you to do it at a more economical rate. Okay. So for example, you've got the 4% advantage loan, which you see up here in the top right-hand corner. We'll really focus on that one in a minute. The government loan, the FHA one, is 6.875%. You can even get up to 5% of the sales price. So again, $400,000, that's a $20,000 a grant or assistance that comes to the program with the program, and you can get that at a rate of 7%. So I know you were asking me earlier, Cecelia, what kind of loan programs are eligible for down payment assistance?
Right.
So one of the things that we offer is we're offering this to conventional financing, FHA financing, VA financing, and yes, even USDA financing.
So that is amazing, because VA and USDA are 100% loan programs. So,
Right.
I think we've been so trained to have Maryland Mortgage Program as the down payment part of it. But now you're telling me Caliber, this isn't unique to all of our lenders, but Caliber is one that is going with that extra layer of greatness of saying, hey, you can take this 100% financing loan product and get some down payment assistance on top of it using the Maryland Mortgage Program, right?
And in that case, it's really not going to be down payment assistance. It's going to be closing cost assistance, but it covers that as part of the program as well. And I want you to tell me and everybody else why that's so important when writing a contract offer and how that gives the consumer a competitive edge.
So, right now our market has been, up and down, and with the increase in rates, everything kind of slowed down, right? So buyers have been getting out again, and they've been getting sellers to get them that closing help. We've been seeing a lot of contracts come back where the sellers are given seller concessions. Wow. Now that so many buyers are starting to get out there and our inventory is still at a low level, we're seeing multiple offers start to come in. And the first thing that goes to the wayside with multiple offers is seller concessions, right?
Right.
So if you can't get that seller concession money, that closing help, where are we getting it from, right?
Yeah,
This
is a great option.
This is the place, right? Now you can compete.
So for example, I think Cecelia, just kind of, add to that. I think what we're seeing now, let's just say you have a VA buyer and they're going in, they're writing an offer for a home purchase at $400,000. And we know the closing costs are going to be somewhere between 3 and 3.5%, right?
Right.
So if that veteran buyer is looking to purchase a home and they are going up against other people who are trying to purchase that same home, they can then come in at list price or at a negotiated contract price or offer price, and they can move forward with their offer and not have to ask for any closing help from the seller. And in today's market, that could be just exactly what's necessary for your VA buyer to win that bid and get that offer accepted over his competing offers that might be interested in the same house, right?
Yes, absolutely. That part is amazing. That is a new part of this program that I didn't even know existed.
Yeah, I've worked for competing lenders in the past throughout my career, and for the most part, I've never worked for a mortgage company that offered that ability to pair down payment assistance with no down payment loans like VA and USDA. So the fact that we're able to offer that here, it really, it gives me a distinct advantage in a lot of ways as well, and gives me just another way that I can help my customers and your customers even more.
Yeah, absolutely. Again, another level of greatness.
I appreciate that. So, one of the things that we talk about all the time that a lot of people have some heartburn, quite honestly, is the fact that the interest rates are a little bit higher. And I touched a little bit about, how you can kind of strategically approach that and kind of see the value in it. So I'm going to give you some examples of a recent scenario that I was talking with a customer that was interested in going forward with an FHA offer. And I had this client, he has outstanding credit scores. So my FHA buyer was like a 690 FICO, and he had to go FHA because of debt ratio requirements. But I was able to offer an interest rate to that buyer based on today's market, today, the day that we're doing this recording, right, at an interest rate of 5.75%. Now, in comparison, the down payment assistance loan with MMP in this 4% advantage property or loan, it comes in at 6.875%. So as you can see, that's a pretty big difference, right? That's the cost of doing business, in my opinion. Now, however, if I were interviewing a prospective buyer who has not an outstanding credit score, but a decent credit score, say 650 FICO score, they would still qualify because they have at least the minimum FICO requirement for the program is 640, but it doesn't go above that 680 level where kind of things change where the rate adjusters are concerned. So if that particular consumer was looking at a traditional FHA mortgage without pairing any down payment assistance, his interest rate with me for FHA financing might be somewhere in the ballpark of 6.5% today, right?
Right.
So now we're talking about just a slight difference between 6.5 and 6.875. But the big difference is that with the 6.875, they're going to be able to receive a grant for up to 4% of the loan of the sales price. Now, again, this comes in either the form of a grant or even a loan, which could be repayable if they don't live in the property for 5 years. Or, there are some restrictions and requirements, and we can talk about that when we get into specific guidelines on, for specific buyers, I should say. But again, the bottom line is you're getting a lot of money to take just a slightly higher interest rate that you could potentially refinance out of within the first year to 2 years of the loan as well.
Correct.
Okay, so again, cost of doing business, cost analysis, it certainly works to the benefit of the consumer in a lot of ways. Now, again, there's a lot of guidelines, and here's a product matrix that we share that kind of helps give us an idea of who can qualify. And when we're talking to a specific buyer, we need to look at every buyer individually, their circumstances, the specifics of their loan, and then make sure we can fit or apply that product to the consumer that's going to be not just the most beneficial one, but also the program and product that they're going to qualify for. Okay. But for the biggest thing to point out is that there are FICO score requirements. And those FICO scores typically start at a 640. And then depending on how high your FICO score is, it could open up some options for you regarding debt ratios or even different programs that might be equally beneficial or more beneficial to you. But the bottom line is every consumer application is going to be different. And we really just need to look at each one of them individually to make the determination as to how we proceed with that particular consumer, and we're offering them the best options that are going to be in their best interest.
Absolutely. And I just want to circle back to our prior video about credit that, if you aren't there yet, go ahead, make that phone call, because you guys are able to help people with that aspect to get that credit up there. Absolutely. For them to qualify for these programs. And they don't have to do it, paying for credit repair, or they don't want to, go down the road of debt consolidation, because that can actually hurt them with a loan product. And so really it's about starting that conversation and getting the ball rolling so they do get qualified for these programs.
Yeah. And Cecelia, I'm glad you touched on the credit repair, because for those who are tuning into this that don't know a little bit about how we structure that to help consumers, go back and look at Cecelia's YouTube channel, and you can pick up some more information from a previous conversation that we had about credit.
That was a great video.
It was very informative. And I like being able to, have the opportunity to present these. Now, Cecelia, what do you think is the second largest obstacle that's preventing a consumer or prospective home buyer from becoming a homeowner?
Probably debt. So probably right now student debt.
Yeah, absolutely. So student loan debt is a big problem. It has been for years. The rules have changed recently to kind of help soften that. But on average, did you know that in the old days, like several years ago, if we had a student loan debt that was $100,000, which is not unusual, we had to count 1% of that against the consumer's debt to income ratio. So that was the equivalent of $1,000 a month payment. Now, the rules have changed here recently to help make it a little easier. And one of the way they've changed the rules is now instead of counting it at 1% of the student loan balance, we have to count a payment that's factored at 0.5%. So again, if you've got a borrower or a prospective home buyer that wants to purchase a home and they've got $100,000 in student loan debt, now we have to count a $500 payment against their debt to income ratio. So student loan debt has absolutely been one of the biggest obstacles that have prevented consumers from becoming homeowners over the past, as long as I've been in the business, we've seen that.
Yeah,
So
absolutely.
Governor Hogan got together with the Maryland Mortgage Program, and they wanted to create an incentive, an option for consumers to be able to allow them to help overcome this obstacle, right? And what he came up with was this really neat program that I can tell you, I don't think any state in the country is offering anything like this. And it's called Maryland Smart Buy Program. And we're on version 3.0 of this right now. And this program is really amazing because, as we know, in addition, we just talked about it, in addition to down payment, the big obstacle is student loan debt. So with this initiative that was launched by Governor Hogan, he wanted to incentivize college graduates or college students to be able to purchase homes in the state of Maryland. And what they've done is they've offered this Smart Buy program to allow people to eliminate their student loan debt just for buying a house in the state of Maryland, right? Think about that. That's pretty amazing. Wouldn't you agree?
Yeah, absolutely. But, what a great reward for getting higher education.
Right, exactly. So, the introductory program, when it first came out several years ago, it was amazing and it was fun. It was interesting and people were lined up at the door ready to take advantage of it. Unfortunately, the program guidelines were really difficult for consumers to qualify for. And one of the biggest reasons that it was difficult was that the program required that the student loan payoff cover the entire student loan balance, and it was capped at $20,000. Yeah,
Most higher education's costing you more than that.
Right. So there was a small percentage of people that had less than $20,000 in student loan debt. So that almost eliminated them right out of the gate. So that was a big problem. So over the last couple of years, just kind of looking at student loan debt as a glance, and I'll share your slide with you real quick. They've made some changes. So let's look at just student loan debt before we talk about the changes. What are your thoughts about this slide, Cecelia? Look at some of these numbers and go over them with us.
Wow. So that's a hefty monthly payment, right? That's up there. I mean, that's like a car payment again.
Yeah. So on average, the average monthly student loan payment is $460 a month. And again, to what we just talked about, the average student is borrowing up to $30,000 just to get a bachelor's degree. And I think that's really low because I look at credit reports all the time and I see most of them running between 50 and I've seen student loan debt running up to $150,000, $200,000. So we see this frequently, and it is a huge obstacle to make this program work because $30,000, it hasn't really scratched the surface, right? So
right.
51% of non-homeowners are saying to us as an industry that their student loan debt is delaying their home purchase. It's preventing them from becoming a homeowner, which is really terrible when you think about it, because we all, I've got kids and, you encourage your children to grow up, go to school, get a good education, go to college. And you do all this because you want them to be successful and you want them to be able to purchase a home. And then you find out after you've done all these things to help promote, education in your household, that now all of a sudden they can't become a homeowner because the student loan debt is preventing them from, right? We've got over.
Absolutely. I'm just lucky my daughter's in the Air Force and, the government, through her service is paying for her higher education.
Well, not everybody has that. And right now we've got over 48 million people in America with student loan debt. So again, this obstacle has been really difficult to overcome. And again, when the program first came out, they said $20,000, you have to use the money to pay off everything. And so if you had a student that had $25,000 in student loan debt, they had to figure out how to pay the balance down to get it under 20 to participate in the program. Same thing, if you had a consumer that had $50,000 in student loan debt, they had to come up with $30,000 to get the number down to be able to participate in the program. And it really did thin out the herd of people who could be eligible and participate. And that kind of left, the program falling short of what its goal was, right? So here's the best part. There's been some revisions to this program, and they do it every year. They've increased it from 20,000, they went up to 30,000, they went up to 40,000. And this year with the 3.0 program, I am super excited to say that now they've increased the opportunity and they're offering up to $50,000 in student debt elimination just for purchasing a home in the state of Maryland.
That's awesome. That will help a lot more people that are faced with this hardship.
Yeah. Now remember, it's up to 50,000. The way the program actually works is they're eligible through the program and they can receive either 15% of the sales price or $50,000 in student loan debt payoff assistance, whichever is lower. And that's important because we all know that we said the average sales price in the state of Maryland is about 400,000, but the sweet spot on this is 330,000. So that means that, it's whatever's lower of the two. So, but again, 15% of the sales price or up to $50,000. Okay. So that's good to know. Now, let's talk about some of the bullet points and some of the qualifying factors of this particular program in particular, right? So what it says is, again, we talked about this, the minimum remaining balance of the student loan debt has to be minimum of $1,000, maximum of 15% of the sales price or $50,000, which is lower. So what it says here is the student loan can be in repayment or in a deferred status. And we know that coming out of COVID, almost every student loan is in deferred status right now. So that's really good news to be able to share that. So it's not like there's any particulars on that. Now, the full outstanding balance of the student debt of the borrower can't exceed 15% of the purchase price or $50,000. It must be paid off as part of closing. And this is going to be reflected on the closing disclosure at the time of settlement. Okay. Now, the minimum FICO score for this program is 720. So while you want to, if you're participating in this traditional down payment assistance, it's 640. But if you want to participate in the student loan debt or the elimination or the Smart Buy 3.0 program, the minimum FICO score is going to be 720. So that's a huge factor that people need to know about as they're interested in this. And if they feel like they're just shy of that 720, again, I'm going to go back and say, hey, apply online, schedule a time, let me take a look at your credit report, and we'll figure out how we can help you boost your score to get you into a position where you are eligible to participate in this program. Okay.
Yes, that credit simulator program is amazing, and I hope more people take advantage of it.
Right. Now, again, one of the nuances of this program is that the consumer has to live in the house for 5 years. Okay. So, for example, it's prorated, the payback. For example, if you purchased a home and you took the full $50,000 and you're agreeing to live in the house for 5 years. If you live in the house for 1 year and move, you sell it, you have to give back the $40,000 that you took, right? Of the 50 you received. If you live in the house for 4 years and you sell the house, you're going to have to pay the program back that prorated portion of $10,000. But the idea is they want you to reside in the property for 5 years, which I think is a small commitment, right?
Yes, actually, the average buyer stays in the house for 7 years. So absolutely. And it's a great trade-off, right?
Yeah. Now here's a great opportunity. We talked about interest rates being higher for these particular programs. There are opportunities for consumers to refinance into a lower interest rate and take advantage of that. But also they still have to stay in the house for 5 years. So while they're refinancing the actual interest rate, they're still have to honor the commitment of the 5-year term. Okay.
That's great news.
Yeah, again, 5 years to have $50,000 worth of student loan debt paid off and you're a homeowner. I mean, come on, that's a really incredible opportunity for a lot of people. Okay.
That is definitely a win-win.
Now, here's another one. A lot of people ask, who is this? Who's eligible, right? The program really is designated for first-time home buyers, but the requirement can be waived if the borrower is purchasing in what's referred to as a targeted area. And if you want to know more information about that, I'm going to have to ask you to reach out to me because there are some specifics where that's concerned that we just can't fit into this into this call. But there are ways to get around it and be eligible for this program, even if you're not a first-time home buyer. Now, again, in addition to that, we all know that, well, some of us know that if it's been more than 3 years since you've owned a property, then you're still considered a first-time home buyer in the state of Maryland.
Correct, for these programs.
Correct. And the other one is if the consumer is an honorably discharged veteran who has not previously used the first-time home buyer exemption, and that's in accordance with the Heroes Earning Assistance and Relief Act of 2008, they too can be considered for this as well. Now, regardless of waiving the first-time home buyer requirement, no Maryland mortgage program borrower can own any other real estate property at the time of closing. I had a customer a couple of years ago that wanted to participate in the Smart Buy program in particular, and they were part of a deed of trust that had been established that for a property that they received in a will from a deceased grandparent, and that eliminated them from being able to purchase because she had an ownership stake in a property that was left to her that she really wasn't living in. So that there are some restrictions and guidelines that have to be met where that kind of stuff is concerned as well. But again, it's a great program for a lot of people to be able to participate in. Now, here's a question that I get asked frequently. What if you have two consumers, right? And let's just say you got two borrowers purchasing, a husband and a wife, and the husband has $30,000 worth of student loan debt, and the spouse has $100,000 worth of student loan debt. You can apply if the 15% number or 50,000, again, whichever is lower is applicable here. If it's $50,000, we can cover the full amount towards the lower of the two student loan debts. But again, it has to pay off at least one of the two. So in the scenario that I just explained, we've got one borrower with $30,000 in student loan debt and the spouse with $100,000. We would take the $50,000, pay off the balance of the $30,000 spouse, and then apply the additional $20,000 to the other spouse. So there's a way to patch it, mix it up. Now, what we couldn't do in that scenario is we couldn't give $25,000 to one spouse and $25,000 to the other, because again, the guideline requires that we have to be paying the total balance in full of at least one of the two consumers.
Right. They want that bill gone so you can now have that money for your mortgage payment.
Correct. Now, the other thing to take into consideration here is that, again, if you've got a consumer that has $55,000 or $60,000 in student loan debt, and they qualify for the $50,000 assistance to pay it off or eliminate it, they can pay off the balance to bring the number down, to bring their balance down to 50,000 and still be able to be eligible to participate. So if they have the funds or the ability or the means to do that, they can certainly, accommodate qualifying for the program by doing so. Okay.
Okay.
All right. Now, another obstacle that we seem to run into frequently on the Smart Buy 1.0 and the Smart Buy 2.0 program was the down payment requirement. In the past, you needed 5% of your own money or receiving the money in the form of a gift to qualify for the Smart Buy program. Well, guess what? No more. We are gone with that, and we're bringing in the opportunity for the consumer to apply down payment assistance to use to cover that 5% amount, or at least up to 4% in this case, right? So for example, if you've got a conventional loan, which this is definitely going to be a conventional loan product for the consumer, and they don't have 5%, maybe they've got 1%, they can get 4% in down payment assistance. And as of today, that rate would be 7%, and they would be able to qualify and still utilize down payment assistance and not have to come up with the full 5% from their own resources.
And get their student loan debt paid off. Wow.
Gone, eliminated, right?
That is amazing.
Got to commit to living in the home for 5 years. Now, I hate to say this, but wait, there's more, right? We hear that all the time. So if you are a first-time home buyer and your area median income is less than 50% of the average of the county in which you're purchasing in, you can get up to 6% in down payment assistance, which is crazy.
Wow.
So now you're getting, so now you're getting your 5% and you're able to apply the additional 1% to go towards the closing costs. So it makes your offer even more attractive, as we just talked about, in a competitive situation, right? So how does that look? Yeah, so let's look and see what that looks like from a payment position, right? We talked about, area median income. What that is that's the average household income of a consumer in the counties that are broken down. And it has to be 50% of what the average median income is in that particular county. So let's just use, what do you want to do? Which county do you want to look at? Charles County?
Let's do Charles.
All right, so Charles County, the average median income is $140,500. 50% of that is $70,250. So if you're a consumer and you're interested in becoming a homeowner and you have $50,000 or less in student loan debt and you meet the other qualifying guideline requirements, and you make less than $70,250, you can get up to 6% in down payment assistance by using the Maryland Mortgage Program Smart Buy 3.0.
Wow.
Exactly. Wow.
Yeah, that really helps, a lot of people, especially with the increase in sales price and everything, where, salaries aren't keeping up with that. This is tremendous.
Right. And we talked about it a second ago. Yeah, the rate's going to be a little bit higher, but you're not having any more student loan debt. It's gone, forgiven. Live in the house for 5 years, take a higher interest rate with the understanding that you could potentially refinance it at a later time and eliminate your student loan debt. But more importantly, you own a house, right?
Absolutely. And
how are you not winning from that? That is a major win for anybody who can qualify. And we are allowing people, or we're finding that more people are meeting the eligibility requirements and qualifying this program. But the problem is people don't know that the program guidelines have changed. So we need to make sure that we're getting that message out to make people aware of that so they can kind of revisit this.
Yeah, that's amazing. That's a win-win-win situation.
Yeah, it can't be better. So Cecelia, I mean, if any of your listeners or your viewers are interested, again, I'm happy to offer my services to kind of walk them through the program, run them through to make sure that they can qualify, and then talk to them about what their loan options are. Here's my contact information right here. They can certainly reach out to me at any time, but also of greater importance, I know they're going to need a great real estate agent to help them. So, no better than you to assist in that part of the process. And here's your contact information as well. Anything that you want to share?
Well, and we're watching all the stack upon stack of savings or programs to help people get into the houses. But if you are a hero, a community hero, you can also receive the rebate through my Homes for Heroes program. And we talked about that in a different video, where people are getting from $1,000 to $6,000 back, depending on the price of the home, from me.
Right.
And so that's also another great savings. So it's almost like we're paying you to get into a house.
It really is crazy, all the incentives that we're able to kind of piece together here to really help consumers to become homeowners. I mean, it's phenomenal. And like I said, I couldn't think of a better partner to do this with. And I'm really glad to have these opportunities to not just talk about these things with you, but share to everybody that's in your network as well. Because, at the end of the day, we really get a huge thrill from being able to help people. And that's really what it's all about.
Absolutely. We want home buying to be the best experience possible.
And I'm glad you said that, because it's not always a fun experience for people. It's very labor intensive, and we do our best to make sure that we're making it rewarding for everybody.
Absolutely. Well, thank you for going into depth about this. And I hope people, if they have any questions, you can reach out to me. I actually have these brochures from MMP that they sent me. So if you would like one of those, you can absolutely reach out. I'll drop it in the mail to you. Or, call Billy. He can go in the ins and outs of it all.
Absolutely. So again, Cecelia, thanks again for the opportunity to be here with you today. And until next time, I'm looking forward to our next call, and we'll get together and talk about what our next topic is going to be about how we can help people with their home purchase.
Absolutely.
Terrific. Thanks so much.